So he that is already down fears no fall.
Fears no fall.
Because it's when we save that we can even invest. Like I tell people, currently the interest rate environment in the global space is also a major factor. So, since almost last year, we've been expecting that there will be a major rate cut, but we've not also seen that. So yield across, especially you look at the US, look at most of the euro area, is still relatively high. Compared to when we talk about 2016, when it was almost near zero. We've noticed when foreign investors dominate a market, when they come in, they blow it up. When they are going...
When they just crash it.
They just crash it. They can't sell. When they are going out, even if they buy Zenith at 50 Naira, they can sell it at 10 Naira once they have the order to leave.
Hello, everyone. Welcome to Talknomics, brought to you by Nairametrics. Of course, my name is Ugodre, and we do this once every fortnight. And this is the talk show where we talk to business leaders in economic, finance, and business. And these are people who really know their onions, people who try to break down, demystify, sometimes often complex or often controversial economic, finance, or business discussions. And of course, today, I'm very excited and very pleased to have with me Mr. Dr. Ayodeji Ebo. I knew you were Mr. Good to meet you, man.
Ayodeji Ebo. Here.
Yeah, of course, is the Managing Director and Chief Business Officer of Optimus by Afrinvest. Great to have you, bro.
My pleasure. Great to be here.
You look good.
Thank you.
Looks like this economy is smiling good on you.
We are trying to navigate around it.
Is the economy smiling good on you? Let me know in the comment section. All right, so we're going to be talking a lot about investing finance in this economy today, Ayo. But I want to start first with tax, right? We've just had the tax reform bill. I guess we can call it Tax Reform Act now, signed by the president, and there's been so much talk around how progressive it is, particularly for the poor, and how it also, more than ever, caters for small businesses who don't need multiple taxation. Of course, these are also mostly people in the informal market. There's also talk around, the more controversial VAT-related issues, but VAT on its own wasn't increased. It's just how it is shared that was also discussed. So I've also seen a lot of positive sentiments around the bill, but I'm more specific now towards investments. Not a lot has been said around, what it means for those in our community or your community as well, because this is also my community. So those that are investing or those that are managing, portfolios. So from your view, tell us, how are you guys in the investing community perceiving this act?
Okay, so very interesting, and I would say overall it's laudable, given when last we review our tax rates across and looking at how things have evolved. So for the investors, I think the major part that they will need to focus on is on the capital gain tax, which means that if you buy and you make money from the market, you need to also be prepared to pay taxes. But there's a threshold. So you will know that the new law also has the threshold for personal income tax, that if your income is below 800,000 Naira per annum, which means that you will not be paying, you're exempted from taxes. That same rule applies to the capital gain tax. For the threshold between 800 and 5 million, the personal income tax is around 20%. It means the capital gain tax you also be paying would also be around 20%. If you recall, capital gain tax used to be 10% flat.
Yeah.
But now it's been graduated, and that's why we're talking more about progressive. So it's more taxing the rich, people like Igodre, taxing them more. Yeah. So if you are earning above 5 million per annum, means the 30% will be applied fully to the capital gain tax. So put it for instance, if you buy a share, let's say you bought MTN at 170 and currently it's almost at 340. So you look at the difference, that gain would be taxed. But if the value of your total shares or transaction is not up to the 800,000 level, you'll be exempted. So part of what we're looking within the community is also a bit still complex, because how do we know? So if you are trading, for instance, how do we know that based on your threshold? I know when you are onboarding, there's what we call they ask for your annual income. So the system will now have to be built in a way that if your annual income is at a certain level, it just would be able to identify if you'll be paying tax or not. But when you look at CGT, which is the capital gain tax, it's not charged from source. So it's when you are doing your annual...
Is it?
No.
Oh, okay. When you're doing your annual returns.
That you declare.
Okay.
So it's not like the withholding taxes and the VAT that we charge for transactions. So it's not for operators. It's not really going to be a major burden. But for the investors, you will need to be able to track the total transaction you have done, because the penalty is steeper now, 100,000 per month.
If you don't
pay the tax. So it's good to have that understanding so that you don't, because if you have missed it 2 years, 3 years, you imagine the penalty that you would have to come and pay may even be more than the cost of that investment at the end of the day. So it's very important that you get yourself familiar with this new rule.
Interesting. So anyway, so let's assume now that I earn more than 5 million per annum. So typically that tax would be deducted from, I guess, my salary via PE. So if I also have a portfolio, maybe I invest in stocks or fixed income securities or whatever asset class that is taxable under the capital gains tax. So do I then have to go and declare that amount to, let's say, maybe Lagos LIRS or whatever state and revenue service? Is that how it's going to work? Or how would they know anyway?
So yes, you have to first of all, you have to declare. Yes, for them, they can do their own internal investigation if they feel that you are paying less. But when you render that return, the portal, the LIRS portal, it will ask you even some of your costs, how much is your rent, your landlord address, all those things. They ask those details. So it's left for you to have done your calculation. It's going to be an interesting time now for the tax operators, because for those that deal with a lot of transactions, you may need a tax consultant to help you so that your liability is not significant if you don't pay to amount. So for those, they may suspect that maybe using their BVN and they see that the volume of transactions going on in your account is significant and you've not been paying tax. They may be forced to now ask, maybe they see that you've credited one stockbroking firm or for one investment firm, ask for the statements. Those are the ways if they investigate. But declaration is, first of all, you have to be the one to self-declare that before because they won't be able to know that, except now that maybe they now plug in also with the CSCS system. They now also plug in with, I don't know, there's no central.
Which are all the things that are possible anyway with
technology. It's really possible, but we're still trying to see how there's still a bit of complexity around it. But we say, yes, it's a positive one. And the target is the high end, because I feel, when you look at also use the Pareto principle, they will focus on the 20% that will give the 80%. So that's what they will do. But I'm not saying that those that are not within that range should try to evade to try to evade tax. So there'll be need for people to also understand, there's what we call tax evasion and tax avoidance. Say evasion is the one that is the crime. That is the
crime,
The avoidance is planning. Tax planning will now be very critical. Are you buying in a joint account? Are you buying in a company account? Do you need to? Are you buying your investments in a personal name? Which one gives you less tax? If you are, so those are those things that the tax consultant to now will now be advising to you to look at what structure will give you less tax payment.
Okay, so I mean, from a fiscal point of view, this is good. At least now you now have tax reforms that align with current realities.
Yeah.
But as those of us in the investment community, we know one of the things that we've been trying to do is get a lot more retail investors on board, try to get a lot more Nigerians to invest in the capital market, because we know how important it is to capital formation. So do you see any risk here? Could this maybe create a different kind of apathy towards investing, particularly for, I mean, the upper class would always want to invest in these things, but say the middle class or the lower middle class who are trying to come up, is this a risk?
No, I don't think that this is a risk because the threshold. So when you look at retail investors, when you are going to classify, when you even look at it based on income, based on, I think, the MBS data, then that's maybe more than 80% earn less than 1 million naira per annum. So when you look at that threshold, so for most of the retail people that will need to begin to learn about investment, they won't be bothered about, they are not going to be bothered about paying capital gain tax. So it's still positive for them. The only gap is that I feel that the tax authorities, there's a lot of investor education or awareness or publicity that needs to be done. And I know that's also part of the plan. I think Mr. Taiwo Oyewole also mentioned that they are also going to be part of Oyedele, rather. Thank you. They are going to be part of the implementation. So there's a need for that public awareness, because the way news fly in Nigeria is tax. They've just increased tax, so people don't know whether it affects them or it doesn't affect them. So once people get to know that, and we know the gap, I know the SEC is working on also filling that investor education gap is still very, very wide. A lot of people don't invest. Yes, we can say savings ratio is low because disposable income is low, but with what we've come to understand, and also with my experiences, it's also an habit. Is if you build a culture. So if you're earning 10,000 naira, you're able to save 100. Even when you earn 1 million, you won't be able to save 10,000 because you are not just used to it. So those form of culture cultivation needs to be brought into the country. So you see, like countries like Singapore, there's what they call 100 by 65. That at the age of 65, I want to have 100 million Singaporean dollars, or I've forgotten their currency, but they've just built it from primary school. People are
already have that.
They have that mindset,
coded in their mindset.
That at 65, I want to have 100 million. So imagine that
currency.
of their currency. So as a Nigerian, that's from my primary school, I already have that mindset that I need to save to have 100 million by the age of 65, which is their retirement age. So everyone works towards that. It's already a culture. Nobody has to persuade you, because it's when we save that we can even invest. Like I tell people, if we talk about investment from now, if there's no savings, there's nothing to invest. Looking at even the economics model, we say the income equals to consumption plus savings.
Exactly.
So if your total income is equals to consumption, then savings is zero and investment will be zero. So those are some of those things that I think they will also need to work on.
All right, thanks, Ayo. Let's now segue. We've talked about fiscal policy, which this tax bill tries to address. So there are a whole lot of other reforms that we've been seeing under this particular government, particularly monetary policy. We've seen, the forex, policy take place. You've even seen a different kind of CBN from what we've known. CBN that is now back to orthodoxy. We've seen fuel subsidy removal, and a lot of these things have led, of course, to higher inflation, higher interest rate. How is the investment community taking this in, has this been some form of maybe negative implication to all of this? So, for example, are we seeing maybe some of the people investing through you saying, look, interest rates are too high compared to the dividend I'm getting, so I'm not going to invest in this? Or are people cycling money into the real estate? I mean, just give us a broad view of what all these reforms have actually meant for an investment community, and whether new habits have been introduced, or whether old habits still remain.
Okay, yes, very interesting question. So if we look at most of the reforms, they came as a shock. So even to the community investment space, it was also like a major shock. So you look at even the companies. So let's look at just last year. Most of the companies, especially in the non-financial space, most of them recorded a loss. Even their shareholders' fund, all their retained earnings were eroded. So as a result of that, you will see that their share prices declined. So for those that have invested in them would have also lost money. But those that understood that it was also a matter of time, they also took position. So you see the likes of even Nestle, Nigerian breweries, those non-financial that had issues last year. So the FX devaluation was a major shock to the community because it impacted on companies significantly. And even for those that might have even collected loans and giving out loans, because of that FX element, cost of production increased and it was difficult to be profitable at that moment. So from that low base is what the market is riding on this year that we are seeing the gains. So based on we've seen the Q1, that's the first quarter result of most of these companies, and we could see that on a quarter-on-quarter basis or compared to year-on-year basis last year, Q1, that they are now getting to a positive territory. You see MTN from September last year was a bit profitable, then December was more positive, and we saw Q1 also very positive. So that trajectory is also helping the investment space, that we see that for most of the companies that have done well are in the non-financial space within the system. We'll also look at the yields. So the CBN, to reduce speculation on the FX, also drastically increased the yield on fixed income investments. So result of that also impacted the equities market, because if you look at on a dividend yield basis, maybe average of 9-10% for a very good company, and you have treasury bills earlier this year was giving a return over 26%. Currently is around 21%. So there was a need to rotate investment, and like we always say, you need to have a balanced portfolio. Across the different asset classes. So that we saw that rotation to the fixed income, and now with the yield also coming down, people are also trying to position ahead, because if rates comes down and we see that commercial papers rates of commercial papers are also down, means cost of borrowing will be lower, and as a result it will improve on profitability of those companies. So that's the mindset of most of the investors. So we expect that interest rates may still come down because it's also not very sustainable for companies, even for the government that's borrowing. It's also cost of borrowing will also be very high, but there needs to be a balance because if it's no longer very attractive, CBN is looking at, will there be pressure and speculation on the FX? But when you look at the policy, the FX policy, since also the launch of the B-Match system in December, this is almost going to 7 months now, a lot of stability. So it's gradually building confidence, but it's easier to breach a trust than building it. So it's really going to take a lot of time. People are still trying to see, okay, is it real? Will it be stable? I hope there won't be any policy flip-flop. And those are some of those things that are still running in the minds of investors. But by and large, that it was from a very low base. So it's like, say, that is already down, fears no fall. Yeah, so it was from that low base that things had to now picked up, that even for Nigerians had to just recite to faith and see how you want to reposition. And since everything was already done, any little effort would definitely be positive.
All right, great. So, I mean, hearing you, appears there's a lot of local, interest in investing in Nigeria, particularly when it comes to maybe fixed income or even equities. But how come we're not seeing a lot of FPIs? I mean, FDI is a different conversation, but we're not seeing FPI, with at least come in at the sort of levels that you'd have expected. Remember the last time we went through a currency crisis, 2016-17, we saw influx of FPIs in 2018-19. If I remember, I think in 2019, we were doing $20 billion in FPI inflows. Same thing, 2013, 2014-ish as well. We did see significant inflows, but we're not even seeing anything close to $10 billion in FPIs. What are you hearing? What's the reason why they haven't come yet? Is it a time issue? Because maybe are we too in a hurry? Or is there a different kind of competition for capital flows out there that maybe some of us here are not used to? Or are we just in a different world now where maybe we have to rely locally, and let's just forget about FPIs? What's your take?
Yeah, so I think you mentioned on some of the issues. So starting with for the foreign portfolio investors, which we call hot money or short-term FX inflow into the country. Currently, the interest rate environment in the global space is also a major factor. So, since almost last year, we've been expecting that there will be a major rate cut, but we've not also seen that. So yield across, especially you look at the US, look at most of the euro area, is still relatively high compared to when we talk about 2016, when it was almost near zero. So secondly, we also look at the developing or emerging markets. So you see even South Africa, you look at Egypt. These are competitors that if their rates are also more attractive than our own, and they have more stable FX policy. So we would also be competing with them. We've seen, when you look at the NSC data, we've seen there's been an improvement, but it's still very low compared to what we see. So where I feel that they will need to still ensure to be sure that there will be a bit of stability in this in the FX, because FX liquidity is key for them. So it's easier. It takes time to build trust again. So they don't want to get trapped. They were trapped for years. So before their risk management will agree to look back and come and invest, is also going to take time. And you have to justify. So if there are 3-4 emerging countries and you see that there's potential to make this, if the return is the same, you go for the one with less risk and with clearer policy. So that's part of what I think. But we're seeing conversations around, so it's not like a no-no, like what we used to have almost 1 year ago, 2 years ago.
2 years ago, yeah.
They don't entertain conversations. So now they can entertain conversations still. So let's still be watching. Let's still see how things are going. So, but they are not very bullish on Nigeria market for now. So where we see them, if I'll come in, is the fixed income, the almost structure that has been done. They can earn close about 25%. So they just quickly want to play that short.
That short window and exit. But isn't that a problem for equities though, for example?
Yes,
as an alternative asset class that also needs,
liquidity. The way CBN has also structured it to play in the open market operation, the treasury bills market, it's only the banks and foreign portfolio investors. So the domestic investors, whether retail or HNIs or PFAs, cannot play in the open market. So, and banks, hardly, they don't invest in equities, and the FPIs, they can decide based on the asset class they're looking at. So that is not really creating major problem. You would observe that in the equities markets, that even when we had at the thick of the global trade war, our market did not shake because they are basically controlled by retail investors. It's just that we don't have the capacity.
That's retail local investors.
Retail local investors, but we don't have that much capacity to drive the volume. But it creates stability because we've noticed when foreign investors dominate a market, when they come in, they blow it up. When they are going,
when they just crash it.
They can sell when they are going out, even if they buy Zenith at 50 naira. They can sell it at 10 naira. Once they have the order to leave, they leave at any price. But for domestic investors, some people can change their strategy. If you think it's a short-term strategy and you see Zenith at 20 naira, so you change it to long-term that I prefer to hold, that you may not want to crystallize the losses. But by and large, we still need the foreign portfolio investors because we are unable to drive the required volume that would actually push the market up. So we imagine what market seems like is performing positively now. If we see policy that will further bring more foreign portfolio investors, you will see that prices of most of those assets would also pick up.
All right. I guess this leads me to the next question, which is following from what you've just said now, which is the stock market. So we've seen a stock market that has been doing pretty well. I think, if I'm not mistaken, we're probably 16 or so percent up year to date. A lot of some of the stocks you mentioned, whether it's Nestle, MTN, Nigerian breweries, even Guinness, a lot of them are hitting year highs, and appears it's a market that seems to be doing pretty well. Well, you could say the return is still below inflation, but I mean, as a composite market, 60% is welcome at any point in time. However, there are people on the streets who are saying, we're hungry, the reforms are too tough, there's no money, inflation has eaten up their income, purchasing power has been reduced. Is there a disconnect? I mean, I get asked this question a lot, so it's interesting that I'm the one asking you this question. So is there a disconnect between, if it's in the US, they will say Wall Street and Main Street. So is there a disconnect between our capital market and, what's happening to the man on the street in Nigeria? Because at the end of the day, the companies who operate in this capital market rely on the man on the street to buy their goods or services and then make money. And like as well, we're also seeing their top line actually go up. So realistically, it appears these companies are making money. So where's the disconnect, or where is, the connect?
Yes, so I think, so the concern, we can say is germane, that you can see that capital market is performing, delivering returns. And when you look at disposable income continue to shrink. But, investing in the capital market, people say, is also one way to hedge against inflation. So if I put it logically this way, is that it's even the street that is funding the performance. And how did I say, what do I mean by that? Is that the price, the more they are, when you look at those companies that are listed, when they sell products that are inelastic and have less substitutes. So you look at Nestle, the demand is there. They are able to push price to the final consumer, like we say in economics. So, and the man on the street still have to look for the money to buy
those things.
Buy those things. And that drives profitability. And for those that are investing, they know that will deliver more dividend, and it will attract to pay more dividend to them. So the issue is that even in Nigeria, there's still that financial literacy gap, or if I'll put it that way, that even for those on the street, there are still a lot on the street that could have still been able to afford to invest. Now to even invest in stocks these days, even if you have 200 naira, you can start investing. But not everybody is knowledgeable about that. I'll prefer to chop my 200 naira than put it in what I don't understand. But you need to pay attention. To grow wealth, we've seen even across in developed clients, is those that have grown their wealth is investment that have grown in companies. If you understand what you're putting the money into, they've grown investment over time. So there will be need to focus more on investor education. Yes, the disposable income is shrinking, but most of the commodities, so when you look at the hierarchy of needs, food, people want to steal. So any company that is producing food on what is would continue to push up their costs, and they will continue to pay. So the quantity they may buy may reduce, but let's not forget that our population is also increasing. So people will still find their way around that. And it's other things that are not necessity that may suffer at the end of the day. But anything that relates to food, people would eat first. Then they say data is life. They also want to get data. Yes.
So this is probably why these companies are the ones doing pretty well.
Yes. So you can see that you see MTN, for instance, check their first quarter results. Data is giving more revenue than even voice. Because of WhatsApp. People prefer watch a lot of videos now. And you see, for those that are not even earning much, some of them is spending close to 20-30% of their total income on data. So we'll see that companies will be playing on that psychology to be able to also harness more from most of these people. So by and large, yes, that disconnect will continue to be until there's that investor education to bridge the gap, so that if they had value, so if I know that I can turn my 1,000 naira to 1,100, and inflation rate would bring it down. If I don't do anything and keep that 1,000 naira, will bring it down to maybe 900 naira. So I'm better off investing, getting 1,100 than keeping the money, and the value of the money is 900 naira.
Interesting point. You've made here with this analogy, but let's also look at what this also means for the broader economy. So some people will say the stock market is the barometer for the economy in general, and so we're seeing prices, the index go up. You're seeing profit numbers go up. You've just explained why this is happening. Could this also perhaps mean that we might be on the cusp of an economic growth despite people still being largely impoverished? Is that what we're seeing? Because if companies are growing revenue-wise, you could say maybe it's inflation adjusted because of price, but a lot of companies, are also reporting volume increases. Yeah. So is this a sign that we might probably be seeing some type of GDP growth rate, and then maybe it's just the other indices lagging behind?
Yeah, so I will start with the central bank survey for me, on business survey for me that I looked at, and it showed that a lot of business owners are really very optimistic about the economy. In the survey, they'll look at in 3 months, in 6 months. So they're very bullish. And one factor of that is the stability that we're seeing. For a lot of investors, they were skeptical in making investments in the last 1-2 years, not knowing the direction of where things will be going. So that stability that we're seeing, especially within the FX environment, is also increasing, boosting investments. So as we get to see more investment expansion, I think there were a lot of even companies that their expansion plan, they had to put it on hold. Then now a lot of them are resuscitating that and are expanding based on the demand. The population is also growing. Yeah. Secondly, government on their own is also trying to put things in place, whether in form of palliative policy that would also drive demand. But what I would say is that it's the stability that we're seeing and optimism that is also fueling the demand. So as companies are producing, they're seeing more people also place demand. But it's not general. So it's going to be those items that people think they are very necessary. I recall if I look at maybe the restaurant, this when I go with my family out on, let's say, on a weekend, look at what we spend now. It's like times 3, times 4.
What you were spending.
What we used to spend less than 2 years ago. So maybe before we do it weekly. Now you may change it to twice a month, which not like you would cancel it totally, because you still need that for family bonding. But that's the way people would just adjust totally. And companies are already trying to look at what we call that sachetization. So the item that is not affordable to people before. Now you put it in small sizes such that people can also be able to afford it. And so there are a lot of business strategies also is changing. And as a result of that, but I think by and large is that there's renewed optimism. Yes, while things are not looking as pretty as it should, but once there's optimism that things will work out, rather than people packing their money, they don't know what is next, you will see people investing, trying to take action. So that's what I think is fueling the performances we're seeing, and as well as we look at the GDPs, look at this real estate sector. A lot of them lost money during the FX because of the exchange rate differential. So you've done off plan to say 100 million. Look at the cost by the time you're completing is already 150 million. Yeah. So, and maybe you sign an agreement, means either you do it as a loss.
Yeah.
But now there's a bit of way to project. So you look at the GDP data, real estate is also picking up because more people are investing, because a lot of them had to slow down. But more people are now also investing within that space. So I know people, when you look at the economy as generally, it's not that when we say that the economy is not performing well, I think like someone that would say it's not like the money has disappeared. It's just that maybe is in few hands. And so what we see, what investment also does, we say it also transfers wealth. So there's also that transfer of wealth that you would see, that rotation that you also see when things are also looking upwards. So that's the view that I think I would like to put on that.
All right, great views there. So let's switch to commercial papers. We've also seen a lot of companies rely a lot on commercial papers this year. I don't know, but I kind of think this is one year where I don't think I've seen as many commercial papers as I have seen this year in any other year. And this is a market that I've been tracking for over a decade now. What's giving rise to this? Why are we seeing a lot of companies, even unlisted companies, going the route of commercial papers as a source of capital to fund either working capital requirements, or for some of them, even capital projects? What's driving this?
So I think the first thing that I know is responsible is the CRR, so the cash reserve ratio. So but for you look at it from the bank perspective, lending rate is currently high.
Okay.
So for a bank, you collect a deposit of 1 billion. Maybe you have promised 20%, but out of that 1 billion, you have to keep 500
with the bank, with the CBN.
Bank. It means you have 500 million you need to make. The 20% that is not earning anything. So technically, that means you need to make 40% on the 500 million balance. And there's also what we call liquidity ratio of 30%. So cost of lending is significantly high. So going to the bank to borrow would be around 30-something%, which is not sustainable. So you will see that most of the commercial papers, even at a net or gross of, if they do the weighted average, the 180 days and they annualize it, some of them is not more than 20%, 25% that they are borrowing. So if you have a good rating and your cash flow, it makes more sense to use the capital market, because the rate would be significantly lower.
Yeah.
You even see Dangote Cement, Dangote Sugar, but it prefers to use that so that it will be a mix. You may still be using the bank, but when you're able to get
cost,
yes, your weighted average cost of capital would have reduced significantly. So that's why we're seeing that. But like how I would always tell people, like I advise a lot of people is you also need to pay attention to the ratings. There's a rating threshold that you miss depending on your risk appetite. Because it's not about just seeing yield. You see a paper at 30%, you see one at 35, you see one at 25. You need to know why is one 25, because the stronger the rating, the lower the rates. And it means the less the risk of default. So investors need to pay attention to that. It's very, very key. So in summary, the interest rates, getting a loan in the bank, one, apart from being very cumbersome, secondly, the cost is very high. And you will notice that in the last 1 or 2 weeks, while we're seeing a lot of the companies come out, is there's a shift, a major policy shift now that the SEC said that to issue any paper, it must come through SEC. So for most of them, they've been going through FMDQ to issue it. So now the process, I don't know how simplified it would be, but because of that unknown, a lot of them trying to use that window beforehand, because effective today, any new offer must come through the SEC.
Oh, so that's what we're seeing a lot of.
So a lot of them trying
front loading
to front load and just take advantage of that window, so that they don't have to go through SEC,
which can be more rigorous.
So you see that this week there was close to about 10 different offers in the market. So everyone just trying to, which is going to affect the success of that, because even if we say there's a lot of funds in the system, so almost, so if I was supposed to invest 20 million, for instance, and I have like 10 papers, you want to do 5 million instead of one person getting the 20 million at once. So it's really a lot of competition that we observed in this, and it's just due to regulations. And the SEC also coming in, playing a role, is also to protect, because even for the investors, you may be concerned that who is regulating this CP? Because when we talk about commercial paper, you are lending money, you are borrowing money to corporates. We talk about treasury bills, you lend your money to the government. Yeah. Government can print money. Yes. Corporates can print money. If there's any major economic shock.
And mostly they're not collaterals, right? For most
they are not collateralized, but it's also structured by professional issuing houses that would have looked at the cash flow of the company and ensure. But, when we look at the last, I think 2 months ago, when the trade war, assuming was prolonged, things that we saw yields on Eurobonds decline by close to 25-30%, which had not happened in a long time. So some things can happen. And that's why I always recommend that people should look at the rating. See it as you are borrowing money, you are giving money out to someone. So are you comfortable with the company you are giving the money to, or do you know what those companies do? Just like you need to understand what they do if you are buying the stock. Yeah. So that's the mindset that a lot of investors need to begin to look at before just giving their money out to those companies.
I want to go to the next thing, but I wanted to sort of hammer on this credit rating thing. So I know back in the subprime crisis, a lot of blames went to the credit rating agencies at the time. And if you do read a lot of the reports, then it was also mostly because there were so many securities that were issued at that time, mostly exotic ones that were new. So it was like a boom for credit rating agencies. Yeah. And we know that we're all human beings. So when there's a boom, sometimes you do see controls lax. So do you have any concerns that maybe with the sort of ratings that some of these credit rating agencies are assigning to these companies, are we sure that they are very well rated? Because most of them are also local credit rating agencies, and it's not like there are many here. So any concerns for you from that point of view?
No, so for me personally, I don't have any major concern. So what I try to also ensure, like what the PFAs will also look at, is that minimum of 2 ratings. So to minimize the risk. So it's not like it's total. So, and we have 3 major rating agencies. So if I see a commercial paper, of course CP, with just 1 rating, sometimes I may decide personally to just avoid it. Let's see that compare at least minimum of 2. That if the PFA, the PENCOM, can give PFA guidelines that they should not invest in any company that don't have at least 2 known rating. For me, as an innocent investor that I'm not very savvy, it's good to hide under that rule too. Because most fund managers too will not invest in commercial papers that don't have a minimum of 2 ratings. So it's really very key. It's to minimize the risk and you're able to compare. So when you look at the rating for the short-term rating, mostly investment grade is A. So when you see B, it means you already know you're taking a risk.
The risk, yeah.
So you may want to stick based on your risk appetite, because that will also reflect in the rates. So for the A-rated companies, so whether it's Augusto, GCR, you have Data Pro, when you check the 2 ratings, are they A rating? So you can have, it's good for investors to have that threshold, because I've been trying to emphasize on it these days. Yes, we've not seen any major name default, but there can be a structural problem that would not be the fault of the company, but they may not have the capacity to withstand that shock. And that may have ripple effect. So it's good to ensure that you look at that rating before you invest. At least A rating from 2 companies would give you a bit of comfort.
All right, fantastic. Thanks, Ayo. It's been such an interesting, engaging session so far. I'm really enjoying this. Maybe it's because this is my space still, but I mean, so let's sort of go back to, foreign investors and or maybe institutional investors, and policies. I mean, are there any other policies or reforms that you're waiting to see? And that you feel could, a lot of people have said tax is a game changer, but are there any other policies that you're seeing now that can say, look, if this one now happens, this is a mega game changer for investments in Nigeria?
So one very major policy that I've been discussing in the last 5-6 years is the credit scoring policy, because we need credit to drive business activities in Nigeria. And yes, while we have credit bureau system that they check your scoring, but we've not seen it being standardized. So in developed climes, I recall some of my friends that when they moved, then they had to borrow and pay back to build a credit score that would give them lower rates when they want to borrow. Now we all still borrow almost at the same rate. But if we begin that awareness that even from secondary school, that you need to build a good credit score, even banks, it will be easier for them to lend. If I recall then in the 2007, 2008, then even to buy, most of the banks, you want to buy appliances, they are willing just with 6 posted
checks back then.
You can do that. But because of when the banking crisis came, a lot of people that borrowed could not pay back, so they scrapped that. And this would be affecting business activity. So there's a need. I know there's a policy now that they want to tie credit score to your NIN. There's a need to standardize that. It's really going to be another game changer. That for those that collect money and default, everything is tied. Your NIN, your BVN, you can't operate fully in the banking system. Everybody knows too. You want to apply for a job, they check, they see that you are owing. It will help to bring a bit of responsibility.
Yeah.
And when banks and maybe lending agencies or companies begin to see that, okay, there's a particular to achieve a score, from that scoring, people would be competing to give you loans. Most people don't buy things with cash abroad. And that's why business activity can boom quickly. So rather than me save for 2 years to buy a car, if I have a policy where in the next 2 years I can collect the car now and I'm paying daily, you see that front loading, it will build a lot of policy. And for the banks, instead of just putting money in treasury bills because they don't want to go through the headache of trying to be chasing people or recoveries, it will give a lot of, it will open up a lot of the activities.
But why haven't they come up though? Why haven't we seen credit scoring? Because we've had credit bureaus for years now, and I'm somebody who's very big on consumer lending, and I'm very happy that we also have a president who seems to be very big on consumer lending. And it appears one of the aspect of that value chain is just this credit scoring thing. Why is it so difficult? Is it a technical capacity issue, or do we need to get foreigners to come in here and set it up for us, or what?
No, I don't think it's very technical. So I feel, what we also see in Nigeria is that those that default the most are the well-to-do. So, and you also seen that sometimes when a policy is not scaling through, it's because they may see the implication on themselves. So we just need the president, just like we saw with the petroleum sector when there were issues that he had to step in, the tax reform, he had to step in. If he steps in and we have to just do this thing and make it work, it will unlock a lot of opportunities. A lot. Is it within the mortgage in the space, housing space, that people will be banks will be comfortable because they've seen that you build a very good credit rating. They can give you loan for 30 years. And you are aware, because you'll be responsible and accountable, that you don't want to tarnish your credit rating.
Because it's value that it has.
Yes, it's the value that it has. So everyone will be conscious to work to have a good credit rating, to be able to get loan at a cheaper rate. So there's an incentive to build that credit rating, because it's not the same rating. If Ayo and Godrej, if we have two separate rating, it shouldn't be the same rate that we should assess funding.
Exactly.
If you
lending
have
rate.
Lending rate. Yeah. If you have a good score, better than me, you should have a lower interest lending rate. You should be able to assess funds at it. So it builds responsibility that everyone will be conscious about. So I'm hoping that one day we'll be able to unlock a lot of opportunities within this space, which is going to impact on our GDP, business activities, because most people can't afford to put money down, cash down on a lot of things. But once they're able to, people plan out their income. You see people have different, like abroad, even to repair your car, they tell you, we can give you credit.
Exactly.
Because they already
checked you and see that you can actually pay and you have a very good score.
And you have a very good score. So we'll be hoping that it's going to be a new game changer that will be introduced, and it will be to the credit of the president if that can be achieved, so that even when he's no longer in power, even for him, wherever he is, will be smiling that he was able to achieve
this.
You see, during Obasanjo era, we'll still talk about the pension industry, we talk about the telecommunication industry. So we're hoping that some of these major game changer will be introduced.
Fantastic. Before we close, I want to just get your views quickly on digital assets, which is also another new vista that is about to be open for investment. You've seen a Security and Exchange Commission that is very big on it. But from the traditional investor community, or as crypto enthusiasts like to call you guys, TradFis. So for the traditional financial investment community, what sort of opportunities do you see here, either from an asset management point of view, or portfolio investment point of view, or asset allocation?
So I think firstly is going to be the settlement. Currently, yes, we're trying to bring down the settlement from the T+3 to T+2. And the US is already on T+1. From last year, they changed it from T+2.
Could you maybe explain what that
So
is?
what means is the transaction the number of days it takes you to receive your money when you sell shares. So when we say transaction plus 3 days, T plus 3, which means that it's on day 4. So if I sell shares today, which is a Tuesday, which is the T day, then I have to add Wednesday, Thursday, Friday.
Yeah.
So it's on Friday that I will receive the proceed. I can have access to the proceed of my shares. In the US, it's T plus 1. It means if I sell today, by tomorrow, I get access to the proceed, which also. So we feel that blockchain can be able to help within that space. And beyond that, the asset classes, we know regulations is also now catching up even abroad in the cryptocurrency space. So, but there's a need that the Apex Bank, the central bank, to also we've seen they've been silent within that space to provide more clarity that this is actually an asset that they are also accepting, because when during those controversies, a lot of accounts were closed within the banking system, and banks are also skeptical to open account for cryptocurrencies. So there's a need for the Securities and Exchange Commission and the CBN to work together and to have one voice on this to open up that space. We've also been seeing people are digitalizing land, which is very interesting within the real estate space, that you can buy a digital tokenization of the land. So I feel that there's a lot of opportunities that can be unveiled once the policy is clear, and investor education is also very key, because if we look at even the traditional assets, where there's still a gap educating investors. Now this is a more complex and sophisticated assets and more volatile. So there's a need to invest a lot, even from the regulator perspective, in investor education for a lot of adoption to happen within that space.
Fantastic. So just to close, we have a lot of people watching now, and I'm sure they'll be wondering from Ayo, you have Ayo on set. Ayo can't leave without giving us his own outlook on the economy for the second half. Summary, what do you anticipate to see? A lot of us did have economic outlooks, but I'm not sure a lot of people expected the Israel-Iran war, for example, and sort of the twists and turns that we've seen. So while you're also giving us just summary of your own outlook, what you see for the second half of the year, I'd like you to also end that with so people who are seeing you now and say, okay, so where should the smart money go to? Where should they be investing in? What should they be looking at? Also help with that too.
Okay, very interesting. So I'll start with the FX market, which a lot of people are, where they also, I get those questions. Where do you think should I hold my dollars or should I sell? So I think that, and it's also going to be scenario based, because different factor. If we don't see any major shock that the dollar inflow reduces, at least if it can maintain around the same level we feel that FX will be stable. I don't expect much appreciation. So being stable, so that is like where this is a new base for us. That's what I see. So most planning is around this base, 1.550, 1.6 levels. So that stability means that if I don't expect the Naira to depreciate by close to 5%, then it makes sense to reduce. I would not say you still need to hold dollar investment. So you can reduce your dollar position and take advantage of a 20% return Naira assets that you try to balance. Secondly, if we look at interest rates, it's expected that interest rates should decline, because it's not sustainable even for the government to borrow, and also for businesses, because as long as treasury bills rates remain at that level, commercial people would always price on top of treasury bills, because treasury bills is risk-free, government-linked. Yeah, so that would also now be positive for the companies. Cost of borrowing would go down. They'll be able to tap the commercial paper markets again. So I feel that within that space, we expect interest rate to come down, which will now be also positive for equities. So what I expect that we may see over time, if the FX policy and the continue remains stable, and we continue engagement with the foreign investors, we may begin to see more foreign investors, which means that asset prices will go up because it's a demand and supply. But we need to look at what are those companies that they buy when they come. They don't just buy any company, because what is going on, we're seeing in the market, is even companies that are not making money, is investors are putting money in it. And those are those that get bonds, and they feel they have negative perception about the market, but you have to invest wisely. So look at the NSC 30, for instance. These are some of the companies they want to invest because they're after liquidity. Companies, banking stocks that they put their money, if they want to sell 50 million units. So that's also an area that where investors also need to watch out for. Government, we feel borrowing will still continue at the current level. What we'll just continue to emphasize is that let most of those borrowing go into critical areas to open up, because we pay for a lot of inefficiencies, bringing things from the north to the south to Lagos. To bring things from China to Lagos is cheaper than taking things from Lagos to the north. So it's because of those inefficiencies. So if also that can be taken care of. Inflation, expect that with energy prices expected to normalize, but insecurity is also a major issue that has been hearing. It's been a while that we heard about bomb attack, but we've been seeing that in the news lately, which is not good for us, even for investment. So that may be the downside on inflation. If not, we expect that inflation should at least reduce over time if we don't see any major tariff increase in the electricity space, and also within the PMS space. So that would also be positive because we expect FX to be stable. So looking at critical sector, because of our time that you can target, I feel that there's still opportunity within the cement industry because housing continue to benefit from stability. The FMGC, that the food, fast moving consumer goods, FMCGs would also benefit from this upside because most of the goods they sell are price inelastic and the demand too is also inelastic. So they will be able to increase their prices and the demand will still remain, or they will just be slightly so that area you can still target. And for most of them, when you look at their multiples, so look at Nestle, for instance, the multiple you used to trade is maybe about 10 times. Currently, with even the current price that look high, it's still about maybe 3-4 times straight price to earnings multiple. So it means that there's still potential for it to go higher. So you look at that, the oil and gas sector too, there's been a lot of investment coming up within that space. Yes, the Dangote refinery setting has changed a lot of the games within that space. So
that's for the downstream side. Anyways.
The downstream side, for most of the companies listed there, the downstream. So Q1 impacted on their results. So when we see maybe in Q2, if that also impacts on their results, we feel that they will also have to change their model, maybe get product directly from Dangote refinery. And from that low base, maybe in Q3, we can see that there can be an upside. But for the upstream guys, Aradel, Seplat, Wando, I feel, but I will stick with those first two that I think that there's still value potential for them based on also my management, and they've also been consistent. Seplat pays dividend quarterly and Haradel pays dividend twice in a year. Yeah, Wando is just coming back, and feel that within that space, that's also a major area. So lastly, the banking sector, I don't expect much upside because of expectation that interest rates will decline. Secondly, there will still be a second round of offers, and the bigger news that is not positive is the new CBN rule forbearance. Yes, there have been a lot of publication around trying to exit that, so it may impact on Q2. Some of them may not be able to exit in their first half year, but maybe I'm sure that most of them will want to exit before the end of the year. So that's really going to affect the sentiment within that space.
What about the insurance?
For the insurance, we are taught that with the policy that, NICOM even set a base to what insurance companies can charge 5% for comprehensive, and that, yes, impacted and but there's still a major, the fundraising or the capital verification or capital raising rather would be the major game changer. They need to increase their capital base.
But they've been fighting that though.
Yes, so it's down. That's why the sector can't grow. So maybe a lot of the small players are fighting it. They may have more influence than even the big players, which is impacting. So we can see what's happening within the banking space. The more capital you have, the more you're also able to think of things where you can channel funding and it to help innovation. So there's a need that there should be consolidation. So because once that capital base is approved, there will be the bigger ones will acquire the smaller ones that still have values. And even it's better to have a fewer insurance companies than have a lot of insurance companies that are not strong. So I feel that the major game changer within that space will be the capital raise.
Okay, so let's go to, I know we're out of time, but I just want us to catch a brain on a few other sectors. Agricultural sector, and then we'll close with industrials.
Yes, so for the agricultural sector, this has been, when you look at Okomu Oil, Presco, Ella Lakes have joined, FTN Cocoa, you're seeing that boom. But I feel that they're already livestock, so they're already trading at significant multiples that there's a need for caution and wait for major pullback. So we'll see, when market is expecting, there's an expectation in terms of earnings. So when we see Q2, if they surpass the expectation again, we'll see that they will still move, because that's what happens. It's about earnings. So if they can deliver based on return, and these top two companies pay interim dividends. So if they are able to surpass that, I feel that they would move. But watching gradual accumulation I won't say it's a sector you should avoid, because the demand for oil, palm, their products, and is still very strong. Most of the companies that buy products from them prefer to buy in Nigeria than import, because maybe they've been able to work the numbers and it's cheaper than for them. So there will continue to be demand for those companies. For those that are high risk takers, yes, you can maybe look at the Ella Lakes that are just all coming, because they've not been making revenue from the oil business rather. So that area, and industrial goods, which is the cement industry, I feel that there's still a lot of opportunity within that space. Dangote Cement, Boa Cement currently has been dragging, but with the second quarter result, when investors see and they're able to surpass expectation, then I think that momentum will pick up. What I tell investors is invest in business that you understand. So when you look at the cement industry, now it looks like nothing is happening. If you're a long-term patient investor, this is also the time to lock in and stop chasing. Is when most people, the bandwagon effect or fear of missing out is when it's gained 40, 50%. That's when they begin to ask questions. Can I still put my money? Can I still invest? It limits your upside potential, because it's those that took the risk when the stock was not being attended to or ignored by the market that always most times benefit from the market. You see CWG, they are within the software space, computer space, they are so doing well. I see potential in that company because I personally try to review who are their clients. You see banks, oil and gas companies.
And so their clients are doing well, so obviously you'll also be doing well too.
And it's subscription based.
Wow.
Right? When you build a software, in the first year, the cost, that same software, when you deploy it to 3-4 people, you see that your average costs will reduce, because it's only now amendment. You just need to be making adjustments, upgrades that so
subscription just continues to flow.
Your subscriptions is continue as long as you don't lose clients. Yeah, so see a great potential in those companies. So if those that have long-term capital, and maybe I would say moderate to high risk investors, you invest in growth stocks.
We've also seen Better Glass, probably the best performing stocks so far this year. What's driving that?
Yes, I think part of what drove this current rally is that the space where they play, they are also trying to invest more. I've forgotten maybe $5 billion, if I'm correct, to also expand, because it's like a monopoly space that provides bottles, glass, and glass. So but I feel that the current price may be overvalued, but there will always be, when you see the pullback, and again, whatever your value, your result, use your result to justify. I play more in the US market, and it's your result that you use to justify your price. So we expect you to deliver 100 billion. If you surpass it, it moves off. If you don't, it's down. Even if it's 80 billion,
the share price will be adjusted accordingly.
Yes, and I say our market is also now becoming a bit more efficient, that they react to results. So that's also is talk to watch out for, but a gradual entry, but a major pullback. I tell you, that's promo prices. That's what I tell people. You see a good company declining and business strategy still intact. Just
always an opportunity to get in.
Hold it. Yes.
All right. Thank you very much, Dr. Ayo Ebo. It's been an amazing discussion, an amazing time discussing with you on Talknomics. Of course, you've been watching, I've been speaking with Dr. Ayo. Dr. Ayo is the MD and Business Officer of Optimus by Afrinvest. Pleasure having you. And I hope to have you here again, because I've thoroughly enjoyed this discussion. Thank you very much, sir.
My pleasure. Thank you for having me.
Thank you so much. All right, guys, until we do this again, do have a profitable day ahead.